All right, guys. So, good news. I haven't really been keeping you up to date with this, but this past week, end of February, I just got funded two 100K static accounts on Apex. One of them I passed on Wednesday, the other one I passed on Thursday, and then on Friday, with the first one I'd passed on Wednesday, I actually already made $481 on one trade. With I think just one micro actually. So one NASDAQ micro, I made 481 bucks. I basically caught like, we can pull up the chart. I mean, it's whatever. It's just what happened. Like, I'm not concerned about what happened one day versus another day. I'm just concerned with edge over the long run. But basically, yeah, you can see if you're paying attention to the markets on Friday, it was a big up day. So I was in long somewhere around here once the new day opened, and then I held through all the way till close there. So I made about from, let's just say from like here-ish. Oh, that's a big ass arrow. I made, let's make it green because it was profit, not drawdown. But yeah, I basically was in long there and I held till the close. So that was, with one micro, that was about 481 bucks. Anyway, enough of that. So what I'm going to tell you is why Apex is worth it for the first $25,000 you can make in profits. Okay, and I'm going to tell you how you should approach Apex and the time when you should. So Apex, if you don't know Apex, basically it's a prop challenge company, and they let you pick varying starting amounts to try to make money with. Basically, most of these have a trailing drawdown. So meaning that if you make $1,000 on the account, your drawdown also goes up by $1,000. So meaning that the more you win, and that's not just closed positions, that's open positions. Basically, you're almost guaranteed to blow the account when you try to do those. However, and they have so for those trailing drawdown ones, they allow a lot of leverage, which is nice, but getting passed on it is probably not easy. If you can, go for it. Once you pass them, like I said, no trailing drawdown. However, there is a thing called the 100K static. Static means there's no trailing drawdown. Now, you don't have as much capital to work with, but it doesn't trail the drawdown, so it's much, much easier to pass the account. The only way I would recommend doing a trailing drawdown is basically this. When it's 90% off, pay the fee, YOLO it. Like, literally try to win it in like one trade. Just like set a profit target that would go for the that would hit the profit target, and like pick an amount, a contract size, and like if it blows, whatever, try again. But I'm not saying you should do this. I'm just saying if you're gonna do static trailing drawdown one, that's literally the easiest way to pass it is to literally try to YOLO it and win, and to pass it in one trade. Because when they do these 90% off sales, they allow you to pass in one day. So you could theoretically take one trade and pass it. And then from that point, once you have the funded account, then you would have to trade a lot better. There is a little bit of a trailing drawdown still with the funded, with these ones once you get funded though, but it goes away quickly. So then you would just have to use smart risk management, have a good strategy, and also get a little bit lucky, honestly. But there's a lot of risk with that. So I just say go safer. You can see the leverage is way different though. If you compare a 100K full, you can trade with 14 minis. Whereas with the static, you can only trade with 2 minis, okay? Or with micros, obviously multiply that by 10. But, so 14 minis, and then you'll see here with the static, it's about to pop up, 2 minis, okay? But trust me, this is a lot easier to pass. I'm not gonna say it's easy to pass, but basically, as you can see, there's a trailing drawdown. Sorry, not a trailing drawdown. There's a daily drawdown, or yeah, I think it's going to be called daily drawdown on this. Please go, please go. And I'm going to show you how this is positive EV. Okay, so it won't let you click on it, whatever. Okay, so anyway, but you saw 625. So you start with 100K, but there's 625 of drawdown. So basically, it's actually a $625 account, not a $100,000 account. However, if we do the math, I already did it here, but if we do the math, when it's 90% off, the sale for the 100K static account it costs $15.70 for the first month to attempt it. But now that you can try to pass them in one day, you should have no problem passing it in the first month. Okay? Every consecutive month after that, it'll be cost double that. It'll only be 80% off. But you know, it's fine. That's okay. But like again, you would want to pass it in the first month. And if you don't pass it, you would want to just cancel it and wait for another 90% off sale and try to do it again. Okay? So the cost of having that $625 of leverage is $1,570, and then if you pass the funded account, you have to pay $240 for a one-time fee, or you could pay $105 for a monthly fee, but you don't want to be paying a monthly fee because it's going to take months and months for you to get to build the account up. So this is cheaper than the $105 monthly fee. Don't fall for that because it's a lower number. But this is how much it costs you, provided, let's say you pass a funded account challenge when it's a 100K static account, 90% off sale. This is the cost of that. Once you pass it, you have $625 to play with, but there actually is $100 of trailing drawdown. So it's actually only $525. Okay, so take $100 off the $625 to play with, but look at this. Okay, do you know what EV is? EV is expected value. Any pro bettor knows that. For sports betting, gambling in a casino, or trading, EV is just expected value. If you have positive EV, what it means is that the bet or the action that you're taking in the long run, you could expect to make money out of it, basically. Or if it's giving you free money, like for a casino gambler who counts cards, getting meal comps, where like basically a casino will give you free meals just to gamble at their casino, that's technically positive EV, and that can be factored into your business expenses of, like, if you're a card counter, you factor in things like meal comps and all that. You do all the calculations of all the money costs of everything to see if you're coming out with value or if you're losing value. Okay, so in trading, it's the same thing. So you're starting with 525, but it's costing you 255, so 0.7. So subtract 255 and 70 cents, 70 cents from that. This is the free value that you're getting out of paying that amount. You're paying 255 and 70, and you're getting an additional $269.30 in value. So that's right there. That should show you, ding, 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 when it's a 90% off sale, Apex is worth it. Okay, if it's not 90% off, well, first off, you know 90% off is their biggest discount that they've done thus far. So you should never settle for anything less. Don't settle for an 80% off discount. Don't do that. Only settle for when it's 90% off. Why? Because you're getting the most value. You're giving away the least value, right? And you're gaining the most positive EV out of that. So only do 90% off sale. I would recommend, again, you could try to YOLO a trailing drawdown, but just know that your success rate with that's going to be lower, and those cost more. Even with 90% off, it's going to cost significantly more. So obviously you have a lot more leverage to play with, and if you have a very, very high profit factor trading system, then maybe that could be the better approach for you. But I would say in most cases, you're not going to have anything that's probably above a 1.5 profit factor, most likely. Okay, if you have something that's 1.8 or higher, I don't know how you got that, but like, good, you know, all more power to you. Then I would do the trailing drawdown account. But if you have something that's between like the 1.2 to 1.5 range, then you're probably going to want to do the static account, which I'm going to guess is pretty much every trader out there. I don't know if there is a trader that has a profit factor that's like anywhere near a 2. You might. I'm just saying, but like, I'm talking about a day trading profit factor. Maybe for long-term position holding, you might have a higher profit factor. But anyway, kind of getting sidetracked. This is the thing about Apex, though. This is the catch. Sorry. The first $25,000 you make in profit, you get to keep 100% of that minus commissions. After $25,000 in profits, you only keep 90% of that. Now, think about this. If you had $25,000 in profits on an Apex account, why wouldn't you just withdraw that and then open a NinjaTrader account or whatever, some trading broker, and just put the $25,000 in there? And then you can continue building it while keeping 100% of the profits minus commissions. Correct? So that's the thing, that's the catch with Apex. The first $25,000 you make, it is worth trading with Apex. After your first $25,000 in profits, in your withdrawals, it's no longer worth trading with Apex, okay? And furthermore, any prop firm that doesn't give you some sort of bonus where you keep 100% to a certain extent of profits is not worth it. Anyone that requires a 90% 90-10 profit split, unless it's so cheap that it's worth it, trust me, in the long run, it's not positive. It's actually negative EV. I mean, not negative EV because you'll have an edge, but it's less than you'd be making if you were just trading your own capital. Okay? So this is, I'm telling you right now, right here, right now, how to game the system with Apex. They're only good for 25 grand. Once you've made 25 grand with Apex, don't use them anymore. Just withdraw the 25, YOLO the rest of the account, try to double it up and get another 2 Gs in withdrawals or whatever. Just keep doing that till you blow it, and then just never use Apex again. But they're good for about 25 grand, and after that, you move it into a live account and trade it live. Okay, I hope that makes sense. So that's the whole point of this video, is I'm just telling you that now, when you think about it like that, all this, you break it down, really, the only value that Apex has is about $269.30 of free value. What it boils down to is that. So let's say you have $1 million. Well, if you have $1 million, you have no reason to even use a prop firm. Just letting you know that. Unless you really care about value. But any pro, bettor, speculator, gambler, whatever you want to call us traders, because we are pro gamblers, right? We're trying to find an edge, though. We're not just gambling, but we're pro gamblers who only gamble when we have an edge, right? So this is the total sum of the value that Apex can offer you is this. $269.30. If I'm just saying, be real with yourself. If you don't care about $269, then don't even use a prop firm. Okay, but if you are really trying to be a smart risk manager and start looking for EV wherever you can find it, this is the EV of Apex. Okay, provided that you are a profitable trader with a profitable system. Okay, this is the value that you can expect out of it. So it's really not that much money. Let's be real about it. That's like, you know, maybe like if you worked a, you know, if you work a full-time job, that's like 1 day or 1 or 2 days of pay, depending on how much you make, right? Yeah, so not that much money. It's still positive EV though. Like, let's be real with yourself. You're paying $255.70 and you're getting an additional $269.30 in money to play with. It's like free play money, right? That's what the value is. But this is the total. This is what Apex went on a 90% off sale with the 800K static account. This is the bonus they're giving you to play with. I personally think that's worth it. I would recommend that for everyone. Anyone who wants to be a pro trader. Any pro trader will take free money, right? This is free money. Okay, it's not a ton of free money, but it's still free money. And so as a speculator, you're looking for EV where you have it, whether it's $10 of free money or $10,000 of free money or somewhere in between. It's still a bonus. But I'm just telling you, be real with yourself about what a prop challenge is. This is how much Apex is giving you in positive EV to start with, right? Now, obviously, your system you have to have an edge. Your system has to have positive EV. But if you have a positive EV system, then this is what you get. But only do it when there's a 90% off sale. Sometimes they only come every couple months. Just be patient and wait for it and pounce on the opportunity when it comes. You could even do 2. Like I passed 2 challenges. So I paid about $500 and I got a little over $500 in additional free play money, right? So that's all it is. All right, take care, guys.